Thanks for joining us today. Hello and welcome to Business Daily, coming to you live from Seoul. I'm Lee-Ji-yoon. Before we get started, let's first get a glimpse of today's highlights. The Spanish economy grew at its fastest pace since 2007 last year. How is Spain able to get away from some of its worst troubles? Heated debate over Britain's possible exit from the European Union has left financial markets nervous, sinking the pound to a 7-year low. We sit down with an expert to talk about this. But first, Korea's consumer sentiment worsened for the third straight month in February as government measures to jumpstart spending lose steam, while economic uncertainties refuse to go away. The Bank of Korea's Consumer Sentiment Index came in at 98 this month, down 2 points from January. The central bank attributes the drop to a recent slowdown in exports, coupled with risks stemming from North Korea's recent provocations. Now, this month's figure also marks the same level posted in June last year when spending tumbled due to an outbreak of the Middle East respiratory syndrome. A reading below 100 means pessimists outnumber optimists. Korea's employment rate among those that make up the so-called key productive population is among the lowest in the developed world. Data from the OECD show the employment rate for Koreans between 25 and 54 years old stood at just under 76% as of the third quarter of last year. Now that puts Korea at 27th among the 34 OECD member nations. Iceland topped the list at almost 88%, followed by Switzerland, Russia, and Sweden. Experts attribute Korea's relatively low rate to women leaving the workforce to give birth or raise children, as well as the youth population finding it difficult to land a decent job after graduating college. Marking her third-year anniversary at the top office, President Park Geunhye visited the Daejeon branch of Korea's recently established innovation centers to stress job creation and economic revitalization through new growth engines. The national chain of centers has already attracted over $100 million in investment, while helping nearly 600 startups turn their ideas into businesses. At the Daejeon Center, job seekers and startups who received one-stop services shared their experiences with the president. She also spoke via video call with some of those taking part at this year's Mobile World Congress in Barcelona, hearing how the innovation centers supported their debut on the international stage. Facing slumping exports, Korea's central bank has laid out fresh measures to give smaller companies a leg up in trade. The Bank of Korea says it will raise the amount of its key fund to support small and medium-sized companies by 5 trillion won, or roughly $4 billion. That will put the total amount of the loan, called the Bank Intermediated Lending Support Facility, at around $20 billion. For some of the programs within the loan facility, the BOK will lower the borrowing rates by 0.25 percentage point, and the central bank will also make use of the untouched $3 billion from the current fund for loans. The change will take effect next month and last for a year. After a 10-year hiatus, the Korean government says it's ready to reinstate a cooperation channel with Iran, recently freed of international sanctions. Korea's Trade Ministry said a delegation led by Trade Minister Chu Hyung-hwan is set to meet with Iranian officials in Tehran on Monday. It'll be their first joint economic committee meeting since 2006, and the ministry said they will work to lay the groundwork for local companies to enter the oil-rich country in sectors that extend from energy and finance to culture. There are also plans to dispatch a large-scale private economic mission to Iran, made up of 95 major companies and organizations. Banks across the world are being hit hard, with profits on a downward slide on the back of a slowdown in the global economy and low global oil prices. Our Kim Min-ji has more.
Standard Chartered posted its first annual loss in 26 years on the back of restructuring costs and faltering commodity prices. The bank's pre-tax loss stood at $1.5 billion, missing analyst projection of $1.4 billion. Its bad loan ratio also surged almost 90% from the year before to $4 billion. It wasn't much different for HSBC. The bank posted a loss of over $1.3 billion in the fourth quarter of last year, which was in stark contrast to the profit of $511 million it recorded in the same period in 2014. Global banks haven't been doing well with the slump in the global economy, leading to weak performances by companies and falling oil prices taking a toll on crude oil companies. However, in what could be a sign of light, banks in the U.S. are faring relatively well. According to the U.S. Federal Deposit Insurance Corporation, nearly 6,200 commercial banks in the U.S. posted a combined net profit of $40.8 billion, up almost 12% from a year ago. The growth was attributed to a firm economic recovery and a rate hike by the Federal Reserve at the end of last year. But with many central banks adopting negative interest rates, experts aren't predicting a rosy outlook, as the sub-zero rates will lower the net interest margin, which in turn will pull down banks' operating profits. Kim Min-ji, Business Daily.
Now, when it comes to eye-watering levels of debt and general economic turmoil, Greece and Spain spring to mind, as both went through tough times in the aftermath of the financial crisis that rocked the Eurozone a few years ago. But unlike Greece, Spain appears to be on the road to recovery. And an expert says other countries could learn from a thing or two from Spain. Our Kim Ji-yeon reports from Barcelona.
Spain was one of the countries hardest hit by the 2008 global financial crisis. Its economy was left in tatters after the bubble burst on its housing market and national debt soared. Even some 8 years later, the Eurozone's fourth largest economy is still suffering from one of the worst unemployment rates in the bloc at around 20%. So can it truly be said that Spain is back on its feet now?
Spain has been working hard to dig out of its hole after it was forced to ask for an EU bailout in 2012. And those efforts seem to be paying off as its economy is recovering on the back of rising consumption.
The Spanish government's austerity measures, while painful, have helped the country recover more flexibility in its labor market. However, this came at the expense of big cuts to pensions and healthcare services. Soaring domestic consumption, industry investment, and record tourism also helped the Spanish economy grow 3.2% in 2015, its fastest pace since 2007.
The banks have understood that it's better at the end to restructure the debt and to get it paid later, but to get it paid, then don't do the restructuring and then having the company go bankrupt and lose everything. So a lot of this has already been done, a lot of this renegotiation. So I think that the economy is now in a much better shape and going up reasonably.
The International Monetary Fund forecasts the Spanish economy will grow 2.7% this year. The professor says the recovery in Spain and some other European countries are good reference cases for a country like China that is also restructuring its economy.
So sometimes the press says the economy collapses, goes from 7 to 6.9. Well, that's not a big collapse. But if you go into depth, you see, okay, there is people who were doing quite well, that they do well but not so much, have gone down, and people who were very poor, then they go up. So at the end, it's much better, this 6.9, than the other, because this generates a lot of consumption.
He says countries that depend on China for exports would also benefit as demand for their goods and services would increase. However, the professor adds that a Brexit or Britain leaving the EU would severely damage the Eurozone, as it will lose its biggest English-speaking finance hub. Brits decide on whether they want to stay in or leave the EU in late June. Kim Ji-yeon, Business Daily, Barcelona.
All eyes are on whether or not Britain will depart from the European Union, as a growing number of business leaders are warning against the pullout. Let's take a closer look at what's happening over in Britain.
A referendum on Britain's potential departure, or Brexit, from the European Union is set for June 23rd. With that ahead, the pound hit a fresh 7-year low this week after London Mayor Boris Johnson, one of the country's most popular ruling party politicians, voiced his support for Britain leaving the 28-nation bloc. This goes against Prime Minister David Cameron's efforts to persuade voters and his Conservative Party to vote in favour of Britain staying in the EU. Global credit ratings agency Moody's expects the economic costs of Britain leaving the EU to outweigh the benefits. In fact, French bank Société Générale projected GDP growth may slide by 0.5 to 1 percentage points per year, on average for a decade, while the Eurozone could incur output losses of 0.25%. It adds that a Brexit could lead to depressed business confidence, tightened financial conditions, higher inflation, and lower real incomes. What kind of impact will a potential Brexit have on the global economy as well as on Korea?
And to tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. Welcome to the program.
Pleasure to be here.
All right, so let's first go over exactly what's happening in Britain. I mean, despite growing fears over a Brexit having negative effects on the British economy and the global economy as well, why is Britain weighing in this option of leaving the European Union?
Well, I think UK wants more freedom from EU and less burden from EU. There has been careful comparison between cost and benefits in staying EU. But they decide to stay in EU because it is more beneficial to UK. But the British public's mood has been changed dramatically after 2014's Germany and France's strong demands on UK's more contribution to budgets on EU.
All right, well, now there are various scenarios that could come out of this, but if a Brexit does happen, then what kind of impact will this have on the British economy?
Well, of course, that will give us such a bad effect to the future of the UK's economy. UK is second largest economy in Europe, and however, it is pretty much dependent on other European countries. According to London School of Economics Research Center's recent report, if they really Brexit, their GDP will be decreased over 14% in next 15 years.
Wow, so it's almost 1% per year.
Exactly.
All right, now those who are saying that this is also going to affect the entire Europe, so what kind of impact will this have on other European countries?
Well, that will give also permanent effects on other European countries because the interrelations, export and imports between EU member countries will be decreased significantly. So according to the same report by London School of Economics, average GDP decreasing rate yearly is like a 0.14% per year.
All right, now those who are supporting Brexit, though, have been comparing the situation with Norway and Switzerland, which two are countries that are not members of the EU but still enjoy access to the single market. So do you think that Britain will follow a similar path if it does decide to exit the EU?
Well, I believe that is a possible scenario. If they are after getting out of the EU, they can expand their economic relation with, for example, China and US. Through FTA, for example. And at the same time, they can save their contribution to EU governments, which is almost 13 billion British pound per year.
All right, but I mean, even if they enjoy those kind of benefits and they follow the similar path, the problem, though, is now that this news of a potential Brexit is already sending shockwaves throughout the global financial market.
Right. So according to Goldman Sachs' recent report, if they really Brexit, that depreciates British pound over 20%.
20%?
So, yeah, that's going to be really a huge shock to global financial market. And also that will lose their potential status as a key currency.
Now, we talked about the British pound, but we're actually also seeing this affecting Japan and its currency, making the safe haven asset even more attractive.
Right. So thanks to depreciated British yen, the value
British
of
pound,
British pound, the value of US dollars and Japanese yen has significantly increased. So that really neutralized the impact of the negative interest rate of the Japanese central banks.
Then what about Korea? How big of an impact will this have on the Korean economy?
Well, UK is not our major trading partner, but we will have indirect impact from UK's effect, which is UK's, European Union's countries' GDP growth will be decreased, and at the same time, there will be something chaotic situation about the key currency values.
So we're more on the side of not seeing the Brexit happen.
Exactly.
All right. Thank you so much for coming in today, Professor.
Thank you very much.
And that wraps it up for today. But we'll be back tomorrow at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching, and bye-bye for now.